Hello everybody, welcome to our YouTube channel. So recently, about a month ago, we did a stock on our channel and it was possibly a Wall Street bet or Reddit move, and I wanted to see if that was the case or not. As we dug deeper into the story, it was more than just a Wall Street bets or Reddit move. It is a dry bulk shipping company, very widely looked at, and I'm going to do an update video. If this is something you're interested in, you sit right there. Hi everybody, my name is Glenn Tompkins, Senior Instructor here at VectorVest. Always love bringing these videos to your attention and do analysis to help you make a better decision on what you want to do. So the ticker symbol of the stock is CTRM. It is Castor Maritime. All right, so that's the stock we're going to talk about. But before we get started, if you are a subscriber to the channel, thank you for supporting VV Nation. If you've come across this and you're not a subscriber to the channel, folks, just hit that subscribe button, become a subscriber, hit the bell icon to be updated to all new content that comes out. And of all things you need to do, hit that like button. All right, share these videos with people across your social media. Let's get into the stock. Again, it's Castor Maritime, ticker symbol CTRM. Now, about a month ago, we did a video. It was very widely watched, and we thank you for that, as I mentioned before. But I've got some more information to argue a case that it is possibly a good growth stock, even though it is a low dollar or penny stock. Now, if you're not interested or not wanting to invest in penny stocks, by all means, do not do so. But a lot of companies always start off in a growth phase as a low dollar stock. And if they are worth their weight in salt, what do? They grow. And these are companies that turn into the Apples, the Googles, the Amazons, and all of those things. Now, am I saying that this company is going to do that? No. But does it have potential? Yes. Yes, it does. So let's start getting into my analysis based off of stories on the internet, and then we're going to use the VectorVest software to analyze it even more. So here's the story. First story, Castor Maritime, CTRM, announces its 7th-vessel acquisition of the year for the year 2021, which now means that they've doubled their fleet of dry bulk shipping vessels. That's a good thing. That means the company is all in. They are in the growth phase. They're all in. They're preparing for the resurgence of the world opening up so that they can grow the bottom line. That's what it's all about. Diversified global shipping company Castor Maritime announced today that it entered into an agreement to buy a 2010 Korean-built Castor dry bulk carrier. Man, I will jack up a name in a heartbeat. But here's the details. Diversified global company CTRM announced today that it entered through a separate, wholly owned subsidiary into an agreement to buy a 2010 Korean-built Castor dry bulk carrier from an unaffiliated third party for the purchase of $15.4 million. The acquisition is expected to be consummated by taking delivery of this vessel within the second quarter of this year and is subject to the satisfaction of certain customary closing conditions. All right. Now, on a fully developed basis, Castor will now have a fleet of 13 vehicles or vessels with an aggregate capacity of 1.2 million DWT, consisting of 1 capsize, 4 Castor 6 Panamax dry bulk shippings, and 2 Aframax tankers. Man, I will jack up these names, but that's all right. 13 ships. They've now doubled their fleet from the year before. Another story. Castor Maritime is feeling the Reddit effect. Now, this was done on March 8th of this year. Optimism from fleet expansion. So, it's a small but growing shipping company based in the country of Cyprus. In 2018, Castor owned a single dry bulk shipping vessel. In 2020, Castor spent much of the year as a penny stock, even as it boosted its fleet size. So they're still a low dollar stock. They're doing everything that they need to do to grow the business. All right. However, the stock is now posting big gains, has posted new big gains in 2021 after opening a year ago at 19 cents, rocketed to the close of $1.73 on February 11th. But since then, Castor Maritime has retreated to below $1, but it's still up nearly 280% year to date. Now, if that sounds suspicious, it should. A penny stock and a little-known company that suddenly sees shares spike in 2021, that all has the sign of a Reddit stock. In fact, Castor has indeed been popular on the subreddit forum on Wall Street Bets. It's also being heavily traded on Robinhood. So social media is a part of moving this stock, but besides that, the stock looks like it's doing a lot of the right things in order to grow its company. What exactly do dry bulk shipping companies like Castor Maritime transport? Dry bulk goods are mostly raw materials like grain, coal, and iron ore. Who uses the most of that? China. And because of the pandemic, China has stopped taking in a whole bunch of stuff because of what was going on with the pandemic. So, how about this? In fact, China, which is already recovered from the pandemic, I'll just leave that where it is, continues to drive much of that growing demand. In a report on the industry, Transparency Market Research notes, rapid urbanization, industrialization, and economic growth is likely to propel the dry bulk shipping markets across the globe. Growing infrastructure development, which requires significant use of steel products, is a key factor for driving the dry bulk shipping markets across the globe. Major investments across the globe by various governments and transportation are anticipated to boost the dry bulk shipping market. All right. Now, let's take a look at the financials behind dry bulk or behind Castor Maritime. Revenue this year, $10.94 million. They've grown their revenue every year since they've been in existence. Now, wait a minute. It's a small company. That's not that hard to do. But to consistently do it, even as a small company, is sort of kind of impressive. That's the way I look at it. All right. Talking about the Reddit stuff, shares short. Short ratio, it's 3.52. Reddit should not be coming after this company from a short perspective. All right, so that's a little bit behind what they're doing, how many ships they have, how their revenue is growing. Let's analyze it in the VectorVest software. Here's my analysis. So I'm looking at Castor Maritime trading at 98 cents, and I'm looking at this real-time data today as I do this video, bouncing back and forth between 98 and 99 cents. Changed down just a little bit today for a move of about 0.7% to the downside. Our indicators, relative value, tells me that the stock right now should not outperform a AAA corporate bond over the next 1 to 3 years. So from a longer-term perspective, be careful with this stock. Relative safety is an indicator of risk. Now, these indicators are cast on a scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. This is a risky stock right now. So why are we talking about it? Because the stock has got some upside potential even as a lower dollar stock. Currently, the stock is not in an uptrend with relative timing. It's below the value of 1. So across the board, this is more of a speculative play. But what I do like about the stock, earnings per share on this low dollar stock is positive at 3 cents. They are growing their earnings at a clip of 20% a year as a low dollar stock. All right, but wait a minute. There's more. If I right-click on the stock, I go down to view the stock graph, and normally I look at a stock on a 3-month basis. Here was the analysis back when we saw the big rise up in it, short squeeze move, retail investor move, question mark. The stock's price did rise up. It got to a high of $1.95. I gave something called a line in the sand, or LITs, at a price of 76 cents. Since that time, it's pulled back. Look at that beautiful line. It never went below it. Interesting, right? I'm looking at a 20-day exponential moving average. Right now, the stock is in consolidation mode, all right? It's not gone below. That is a hammer formation. The stock has moved out of the level of being oversold. I'm thinking it's got some upside. But wait a minute. I'm talking about the growth potential in the stock, so I'm going to do something a little different. I'm going to look at the stock a little longer term. Let's move this from a 3-month graph to a 1-year graph, and good googly muggly, what do you see here? Well, when the world shut down, there wasn't a lot of shipping going on, was that? No. And that's what you see right there. But things that catch my attention. Over the last year, earnings per share. Earnings is the engine that drives a stock's price higher, right? Earnings per share has grown. Look at that growth. Now, the rate of growth of earnings is starting to fall back a little bit because the earnings growth rate is pulling down, even though it is still positive. Positive earnings, not by a lot, but it's a low dollar stock. Earnings growth rate positive, but pulling back. So it shows that the rate of change in earnings per share is starting to fall a little bit, but the company's making money. I'm going to take off stochastics. What else drives a company? Well, in order for a company to be successful, it's got to have good sales, right? Let's go put on the sales. The sales over the last year have grown. So they are growing as they invest in their fleet. They are growing. And if the market or the economy or the global economy opens up, then the sales should rise because they're now suited with more ships to accommodate the dry bulk shipping, right? Now, the same thing I did with earnings, looking at the rate of earnings and the rate of decline in the earnings growth, shows me the same thing here. Sales growth. It was steady, but pulling back down. So even though the sales are there and rising, the rate of sales is decreasing. Why? Because they're not making a ton of money right now. But if China gets back into the world of needing products and all that kind of stuff, I think Castor Maritime is setting itself up to be on the right side to take advantage of that. So again, it is a low dollar stock. It is considered to be a penny stock. If that's not your world of investing, then don't worry about it. But this stock, I believe, still does have some upside potential, doubling their fleet, growing their earnings every year, and preparing themselves for the market reopening. We got coronavirus vaccines kicking in. The world's going to start feeling a little bit more safe. This is definitely a stock you should keep on your radar. And as time goes along, I will be keeping my eye on this, and I will keep updating you as time goes along. So with that, folks, until the next time, see ya. Yeah.